The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
A holding pattern for the broad market as investors await a singular earnings report from Nvidia. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. We're just biding time until 4:20. And you can see that within the equity market going nowhere fast. You have the NASDAQ totally flat. You have the S&P off by 0.2%. We tried to make a run for it to the lower end of the trading band today, but we popped back up from that. Now the VIX for the NASDAQ is coming in right at 22, so that's a little bit lower as well. Even the 30-year is kind of tamed us up 2 basis points. I guess the questions remain, do we actually get fireworks at 4:20?
Well, I mean, that is the real question. In a little more than an hour, we're going to find out. A keen focus right now on its supply of those high-powered Blackwell chips used to run all those AI projects. Now, remember, we got earnings out of Microsoft, Meta, and some of those other big hyperscalers, which did show that the outlook for AI spending is still mostly intact. But investors, they really want to see how Nvidia is capitalizing on that and whether it can actually broaden its customer base beyond just those U.S.-based names.
Companies like the hyperscalers, which just turn around and rent out GPU capacity, that's starting to flatten out. So that's why it's going to be harder for Nvidia to grow from these customers.
Now, Nvidia, of course, has been for the past 5 years the focal point of the AI trade that has taken it from second-class citizen to God-tier status. Now, the second largest company in the S&P 500. But that actually doesn't necessarily mean it's going to move the market. In fact, its correlations have been, well, falling. In 7 of the past 8 earnings days, there has actually been lower correlation than the other. Options this Wednesday afternoon implying a 6.3% move up or down, and that's smaller than what was signaled back in February and back in November, just before their earnings then. Now, despite the Nvidia vortex, we should point out it's not just big tech moving today, but retailers also getting in on the action. You had solid earnings reports from Abercrombie, Macy's, Capri, Dick's, giving investors hope that consumer spending is holding up. We're going to get a report from Elf Beauty after the bell today, and from Burlington, Best Buy, Gap, and Ulta tomorrow. And maybe, Alex, that will actually help broaden the market rally beyond tech.
I mean, here's a hoping, right? And here's a good way to also think about it as well. Check out this chart. You're taking a look at that white line, which is the equal weighted S&P versus the overall S&P. Now, the blue line is the 10-year yield, but inverted. So as the blue line goes down, yields are actually moving higher. As the white line goes down, the S&P equal weighted index is actually underperforming. And as you have Treasury yields continuing to rise, guess what? S&P is what's outperforming. So it's that big cap tech. It's not the equal weighted index. So even though Nvidia may not have a direct correlation to the market, does it continue with the theme when the rally has just not been able to broaden?
Absolutely. Kara Murphy joins us right now to kick us off to the close, the Chief Investment Officer with Kestra Investment Management. And Kara, I want to pick up where Alex left off here about the complexion of, I guess we can't really call it a rally today, but wherever this market is at and what you see as potentially leading it higher.
Well, I'm not going to come on here and tell you that Nvidia is not important to the market, because it certainly is, and everyone's going to be watching that earnings report after the close. But I think, as you pointed out earlier, we've seen a little bit of a decoupling between Nvidia and the rest of the market. And I think that's actually a really positive thing. We can't have just one or just a handful of names that continue to dominate year after year. So even though breadth is still struggling right now, what we've seen is that some other areas of the market have been able to kind of shine a little bit during this period of uncertainty. So one that we're focused on a lot is looking at non-US developed, where all of a sudden stocks outside the US start to look a little bit more attractive, particularly as people are worried about things like weaker dollar or policy uncertainty here in the US. And the good news is there's still plenty of different investments to be able to choose from that can offer that diversification.
Are those names, though, in those sectors, are they growth stories or are they just kind of defensive in nature?
So what you see is that the U.S. market is much more geared toward this sort of like traditional growth profile, right? We tend to have much heavier exposure to technology companies, more growth-oriented companies. And so when you move over to, let's say, Europe, you tend to have a bit more value-oriented sectors in general. But that said, you're still having that ability to kind of get out of some of the policy constraints that you have in the U.S. You still have that FX benefit if you believe that the dollar is going to continue to weaken. again. So we think it's okay actually to sort of like pitch over to the value side a little bit if it's in Europe, because US markets have become so geared as a growth story.
Which is so interesting, Kara. Does that mean that we just sell U.S. equities, or it just means they underperform? Like on a relative basis, where does U.S. exceptionalism stay?
Yeah, and I don't think this is a hard turn to the right. I think to your point, it's maybe we start to see some non-US outperform. You don't need to have a bear market in the US to have non-US stocks start to look attractive again. It's just where are you going to find that incremental piece of growth? And we think that some of these non-US stories are going to start to look more attractive.
Does that also apply to other U.S. assets like, say, the bond market and the dollar?
So the bond market is really sort of tricky right here, because that is really the epicenter of a lot of this policy discussion. And I found it really interesting today, right? Even on a day when we're gearing up for Nvidia to report earnings, which is typically a huge focus for the market, a lot of the news cycle has also been focused on the bond market. And this is telling you that people are eyes on things like the budget, federal spending, debt. And these are big sort of existential questions. And these are things that are not going to get solved in the near future, but they are really important. And I think bond investors in particular, the US market is so large, so liquid. Even if you're a global investor, the US bond market is so important that they need to start to see a way forward, right? We need to start to see a path to lower deficit spending and a way for the U.S. government to start to wind down some of those obligations.
Absolutely. But in the meantime, we talk about this idea, Kara, of the liquidity of the U.S. market. So investors may not shun it. They're certainly going to maybe demand a little bit more out of the government if they continue down this road. This seems like one of the areas, at least of all the things going on in Washington, that at least in the short term is probably the least resolvable. I mean, we talk so much about trade on this program, but, in theory, Trump could flip a switch tomorrow and this can be all over. He can't necessarily do that when it comes to the deficit and the budget.
I think you are 100% correct. And so, as we think back to the beginning of this year, we had identified a number of policy risks. One of them was tariffs. Ultimately, though, we don't think tariffs is actually the largest risk faced by the market, because the level of tariffs is less important than just knowing what they are. U.S. companies can sort of resolve around whatever that tariff rate is. But to your point, this idea of sort of like resolving deficit spending and the amount of borrowing that we have, this has gone on for decades. And I like to describe spending and borrowing such as this as really an American problem. It is not a party problem. What we've seen is both Democrats and Republicans have really struggled to be able to get consensus around how do we solve this over multiple years. And in fact, you could eliminate every single dollar of discretionary non-defense spending, and we would still have a deficit. I mean, that just helps, for me, like drive home how really intractable this problem is. So again, we need to find a way forward. We're not going to solve it tomorrow, but we need to start to see a vision about how we can build a plan to be able to get there.
I do want to get your thoughts, though, on the tariff situation, which not only is unresolved, but we kind of keep kicking the can down the road with these extensions of these deadlines. We have not really seen tangible progress on a trade deal. And the market, at least for right now, at least seems to be taking that in stride. But are you modeling in a scenario, some point maybe this year or even into next year, where the market impact could be a little bit more fundamental, particularly if these tariffs and the impact on the economy, the consumer, and for that matter, business spending, do become so material, they feed into the bottom lines of corporate America?
It does feel like right here the market's forgotten a little bit that we still have tariffs hanging over our heads, right? And we've fallen into this like almost predictable pattern of an announcement of huge tariffs being put on and then pause. But we still really haven't gotten to that place to what we know what tariffs are. We know they're not going to be that super punitive level that was announced kind of like early in this process. And we know that they're not going back down to zero, but there's still a fairly wide range of outcomes. So to your point, if companies want to, for instance, build a new factory or hire a significant number of people going forward, they're going to have a narrower range of outcomes than where we currently are right now. And I think it's going to be a bit of a bumpy ride to be able to get there. We still have to get to the end of some of these pauses to get a sense about where these tariffs lie. So to your question about where do we think it all lies, it's somewhere in between where we probably have some level of tariffs, a good bit higher than what we've been used to over the last like 50 or so years. But in time, it becomes manageable by companies who either figure out how to source from other areas or just produce it themselves within the U.S.
Kara Murphy, Chief Investment Officer with Kestra Investment Management, kicking us off to the close here on this Wednesday afternoon, right?
It's Wednesday.
Wednesday,
Yep,
thank you.
hump day.
I'm losing track
You
here.
got
But
it.
of course, Kara O'Dara was just talking about the tariff impact, and we're going to get some more insight on that from someone who knows a lot about it. We're going to unpack what's going on in the shipping sector amid those China-U.S. trade tensions. The CEO of Genco, the largest dry bulk shipper based here in the U.S., going to be joining us in just a second.
All right, plus how advertising production is getting smarter, all thanks to AI. A discussion with Jeffrey Katzenberg, founding partner of Wndrco, and Yinan Na, a co-founder and CEO of Creatify, an AI platform taking over the director's chair when it comes to video advertising.
And that's going to be a nice setup for those results that we are expecting to get from Nvidia. After the bell tonight, a full breakdown of what to expect out of the tech giants. Stick with us. This is The Close on Bloomberg.
Markets recovering from Liberation Day volatility. Seaborne exports from China, though, have not. So this chart shows dry cargo vessels leaving China that are monitored as they leave Chinese waters, and also how filled they are to capacity. And you can see just the decline lower and the lack of recovery despite any 90-day reprieve. Joining us now with his insight is John Wobensmith, CEO of Genco Shipping and Trading, which is the largest U.S.-based dry bulk shipper. Good to see you, John. Thanks for joining.
Yeah, thank you for having me.
Why haven't we seen a recovery in this kind of trading from China?
Well, we've seen somewhat of a recovery. So if you go back a few weeks, Port of LA was down 30% on cargo volumes. Very telling. And most of that was containerized cargo. We've seen a recovery, but only in the last week and a half, in terms of container volumes coming back into the U.S. But I think what you have to also keep into account is that while tariffs have gone down to 30% on Chinese goods,
They're still there.
They're still there, and it was 20% before, we started this whole thing.
And for shipping, how does it work? When does delayed get booted altogether? Like, you can delay a shipment, but when does it get canceled and scrapped or moved somewhere else?
That's going to be very much up to the shipper. But what I can tell you is that, again, on the container ship side, there were a lot of blank sailings, meaning they weren't filled to capacity. That, again, has been taken off the table, but it's very recent that has occurred. I think the hardest thing in this environment is just the lack of not knowing what's coming next. So it's very difficult to make decisions, whether you're importing or exporting or your CapEx requirements in terms of shipping. So I think that's one of the biggest challenges that that's been in place for us.
And that's not the only challenge you're dealing with. We still, of course, have the war going on in Ukraine, which has been a disruptive force. You also have several, I guess I will call them skirmishes, if you will, in the Middle East. That's also sort of clogged up some shipping lanes in those areas as well.
It certainly has. The Red Sea issue and the attacks by the Houthis, that is still for sure a threat. We are not taking our ships through the Red Sea area. I know.
Does that add a lot to your costs to have to go around that?
Well, we build it into our freight.
You build
so
it. Okay.
So for your customers, yes.
We pass it through.
Okay.
Yeah. No choice, right? And I think Egypt has been obviously hurt significantly from this. I think I saw something $800 million a month they were losing. So they've actually reduced fees for some of the container lines by 15% to try to entice more volume, but it's definitely still an issue.
I mean, overall, though, is shipping activity down? Because I keep seeing statistics, and I know it's not all just dry bulk, the statistics I'm looking at, but it seems to suggest trade is still happening. It's just happening in a more, circuitous type of way.
I think that's probably the best way to describe it. Shipping always finds a way to move goods. Again, it's more about, okay, we need to know what the barriers are going to be so we can, have the workarounds and continue to move goods.
So just for those of us who don't know what dry bulk is, you're talking about carrying iron ore, which is used for steel production. You're also talking about grains, steel products, cement. This is stuff that we use and consume on a daily basis, right? It's like the guts of an economy. If you look at where things are going and how they're moving, what does that tell you about the economy here in the U.S. and also globally?
Well, so one of the things a couple things. One, China, there's no doubt their economy is slowing down. You wouldn't necessarily see it in the GDP numbers, but you do see it in consumer demand and certainly housing as well. So that is becoming a factor. Secondly, for U.S. farmers and U.S. agricultural products, there is a 10% tax on that from the Chinese side. The Chinese do import a lot of soybean and corn from U.S. farmers. And if you compare that to where tariffs were before all of this, it was only about 3%. So U.S. farmers were able to be competitive in the world market. What China has done is they have front-loaded a lot of soybean purchases from Brazil, which is certainly a substitution country, and I think you're seeing more and more of that. And I think we also saw a lot of front-loading that began late last year.
So it's hard to get a clear read of the global economy because a lot of it is then distorted by front-running or inventory building, et cetera. If we go into a world where we kind of nationalize products, right? Like we're going to have a nationalized energy industry. Like we're not going to want to, it's more isolation, right? It's the US, it's Europe, and then it's China. What is that? Are you seeing any indication of that starting to happen?
I haven't, not more than rhetoric and talk. I wouldn't say that we can put our finger on any of that. Being a global shipping company, we obviously have a bias to global trade and being open. And look, there's no doubt there have been tariffs on U.S. goods for a long time and not a lot of tariffs on imports. But hopefully people can come together, make a deal, and world trade continues.
All right, John, really appreciate it. We got to leave it there. John Wobensmith, CEO of Genco Shipping and Trading, a discussion about U.S.-China relations. And on that front, some breaking news. This from the Financial Times. The President of the United States is apparently telling U.S. companies that offer software used to design semiconductors that they will have to stop selling their services to China. Now, this would primarily affect Cadence Design Systems and Synopsys. Cadence, Synopsys, and Siemens, which of course is based overseas, account for about 80% of their market. Shares of both Cadence and Synopsys now hitting session lows here on the day. We should point, this is a report by the Financial Times citing people familiar with the situation that the President of the United States and the Bureau of Industry and Security is now ordering certain design companies, software design companies for semiconductors to stop selling their services to China. We're going to get you some more details on that and bring it to you as soon as we can. We'll be back after the break. This is Bloomberg. All right, let's get a view from the sell side. Top calls, big movers on the back of analyst recommendations. And we start today with Booz Allen Hamilton. Goldman Sachs cutting its recommendation on the government tech and defense contractor to sell, lowering the price target to 94 from 108. The bank saying owning Booz Allen at current levels no longer makes sense given, quote, limited revenue and earnings growth over the medium term. Shares down about 5%. Next up, Vail Resorts. JP Morgan raising its recommendation on the ski resort operator to neutral and holding the price target at 167. The analyst says the reappointment of Rob Katz as CEO will bring some fresh powder to Vail. The company reports earnings next week. The shares having their best day going back to early April. And finally, Skechers. TD Cowen downgrading the footwear maker to hold and maintaining its price target at 63. 3G Capital is going to require Skechers for $9.4 billion, a price tag that was below the bull case for valuation, according to the analyst. The shares unchanged on the day. And those are some of our top calls. We do want to stay in the retail space because we are awaiting earnings out of e.l.f. Beauty. The share is up about a half a percentage point on the day as the cosmetic company prepares to release those results. Olivia Tong joins us right now, managing director and senior equity analyst at Raymond James. She's got a strong buy on e.l.f. Why, Olivia? You optimistic about what we're going to hear tonight?
We are, and thanks for having me on the show. We think that they'll beat on Q4, and we've seen a couple of different things happen over the last couple of weeks/quarter. One being that a lip product that they introduced not too long ago has gotten a lot of good traction. Two, they just announced last week a price increase of $1, and the feedback has actually been fairly positive amongst their consumers, appreciating the transparency and realizing, of course, that with inflation and with the potential impact of tariffs, that they need to do that. And then third is the international expansion that they have, they've started UK, Canada, a couple of other countries, but there's still a lot of world to go. So we think that the 1-2 punch of core growth in the U.S. plus international bodes well for the company.
Bodes well long term. I mean, we're still looking at a revenue growth rate, if you believe the Bloomberg consensus, of only about 2%. This was a company that had been growing at well above that, above 50% for the last few quarters here. You're comfortable, though, even though that growth rate is coming down, you're comfortable with what we can look out to for the next few quarters?
I do think so. I think, as I mentioned, they've got the new product and they've got international expansion, which should get that growth rate moving again after the March quarter. And also, if you remember, if you look at the comp for March quarter, they're going against a plus 71 comp. So, being able to grow and finish the year at sort of in a high 20s position is pretty admirable, especially in a tough backdrop with respect to the consumer at this point.
Olivia, what are the risks, right? Like, we always talk about how investing in your face, well, I do, investing in your face is recession proof, right? Like, this is where you want to be no matter what, because women are always going to buy face cream and lipstick. What are the risks to that?
Yes, you're right, Alex. That is absolutely the case, that you see beauty tends to be more recession resistant, not necessarily recession proof. The risks, of course, are that as Romain pointed out, the growth has decelerated. Now, still growing quite nicely and still growing share, which is important, but the growth has decelerated to some extent. And the second thing, of course, is the tariffs. They do produce the vast majority of their product in China. So as we think about the next however many months, where the tariffs are still in flux, and their ability to move production to mitigate the impact. As we mentioned earlier, there's the price increase that they've already talked about, other tariff mitigation strategies that they could put in place. Those are the bigger risks. And then, of course, if there was further deceleration, if the macros get more challenging, and you do start to see some impact to demand. However, e.l.f. does tend to have more value priced products. So as we think about always investing in your face and giving yourself a little affordable luxury, this still resonates, and they are priced at a fairly reasonable discount relative to their peer set.
All right, Olivia, really appreciate it. Thank you so much. Olivia Tong, Managing Director and Senior Equity Analyst at Raymond James. Yes, go ahead.
I have to take issue. You said women. They love their stuff.
True.
Men too.
I did.
I just bought, Derm Store had a great Memorial Day sale, by the way. So.
What'd you buy?
A lot of creams. I'm getting old.
Okay.
I got to get that retinol,
my husband puts
vitamin
Vaseline
C.
on his face.
Vaseline.
Okay? Vaseline.
No.
It's horrific and horrifying, and
That's
it makes
like a high
me
school rookie move.
hurt.
Come on.
It's very upsetting when
That's
he
what
does
I used to
that.
do in high school. I just, slather Vaseline, and I couldn't understand why I kept breaking out.
Yeah, I mean, it's so weird that would happen. Although it probably his face.
Now
probably
I just
loves
use a bunch of overpriced creams that probably do absolutely nothing, but it makes me feel
my
better.
stuff is perfect. Okay, my cream is amazing. I believe in science. Okay, coming up.
How do I look?
Maybe AI could help Romain with this problem. AI video ad platform Creatify has just raised $15.5 million in Series A funding co-led by Wndrco and Kindred Ventures. We're going to speak to Jeffrey Katzenberg, founding partner at Wndrco, and Yinan Na, co-founder and CEO of Creatify. This is The Close on Bloomberg.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romain Bostick.
And I'm Alex Steele. You're taking a look at an equity market that is still just solidly down, but not by a lot. We haven't really gone anywhere. The S&P is just down by about 0.2% as we wait for Nvidia.
Yeah, definitely a bit of a holding pattern here. Of course, Nvidia has been the star of the show when it comes to the stock market for the last few years, largely because of all the investment in AI. The talk has, of course, been about data centers and buying chips. But I think the real question now is, what are the practical applications of all this spending? When do we start to see real people using this for real things?
Well, and also, also, and the chip restrictions have really put a lot of clouds over Nvidia's numbers because analysts don't seem to agree on what that could mean. So the consensus for earnings could be really off. So whether they meet or beat, it could just be quite messy. And then you add the FT story just onto all the confusion that President Trump is ordering U.S. chip software designers to stop China sales, and then things get even more confusing.
Yeah, and we're keeping an eye on those stocks. We should point out that Synopsys now hitting fresh session lows, Cadence Design down, key sites as well.
Yep, and we're seeing Synopsys reports earnings after the closing bell as well.
Yeah.
It's your intro.
It's my intro.
Yeah.
All right. Well, the two people on your screen, those two people, they aren't actually people. They are artificial intelligence avatars. The Arizona Supreme Court is using the tech to simplify and report on court rulings with the public. Now, these avatars were made by a company called Creatify. It's an AI video ad platform that just raised about $15.5 million in a Series A funding round, co-led by Wndrco and Kindred Ventures. Pleased to say, joining us now to discuss that is Jeffrey Katzenberg, founding partner at Wndrco, and Yinan Na, the co-founder and CEO of Creatify. Welcome to both of you. Great to see you, Jeffrey. And Yinan, I want to start with you because I'm absolutely fascinated by what you're doing. When somebody told me about Creatify, my first thought was, why would I need this? Is this for playing games? And someone pointed out this Supreme Court, the Arizona Supreme Court, using this as a way to sort of explain these rulings, explain what's on the public docket. Can you just explain to me how you came up with this idea, and did you expect it to be used in that type of application?
Thanks for having me. So we started this idea from my experience working at Snapchat. I helped build a Snapchat's video platform called Spotlight. So we realized there's a tremendous demand for this short form video era, right? Like there's all the advertisers want to run on ads with the short form video platform format. And so we inspire us to create this idea to use AI to radically make the video creation easier. And to be honest, we didn't expect the use case you just described, but we are actually applying our video technology to different use cases, right? Starting from advertising, now we are seeing new use case like what you just mentioned. And it's very fascinating to us.
So, Jeffrey, I am curious as to how you came about this. Of course, you've been investing in a lot of companies in the entertainment and the tech space, and it's all kind of course, that we now see this is all kind of merged together. Calling it tech media is kind of a moot at this point. When you came across what Yinan was doing, what was it about it that made you take interest?
Well, I think a couple things. So one, storytelling tools have always evolved, and I've always been looking for whatever the best tools are to put in the hands of storytellers. And great technology turns storytelling into really a creative and a business success, which is in fact what Creatify does. The thing I keep coming back to and just feel so strongly about is the human touch is everything. AI, it follows vision, direction, and feedback. And so Creatify isn't replacing the marketers, it's actually amplifying them.
Does it worry you, Jeffrey, that at some point it's going to just take away jobs on the creative front? I mean, I know this is just one slice and it's not necessarily like writing or directing a movie, but you can see how we'd get there.
Again, I come back to the human touch here, I think is just absolutely essential and fundamental. And so the answer is, what I think it does is it democratizes storytelling. So as a perfect example here, what Creatify does very specifically around advertising, and advertising is very much a storytelling enterprise. And it takes something that would cost many, many tens of thousands of dollars and maybe take 4 or 6 or 8 weeks. And it actually is able to do it in minutes and at a fraction of the cost. And so what that means is that you have the best tools in the hands of more people than ever before. And out of that is going to come great work, great creativity, and I think ultimately business success.
Yinan, Jeffrey brings in that human touch element, which always raises the question of the inputs, right? Like the LLMs, the large language models, where you're getting the source from to then fuel the AI and the copyright issues surrounding that. How are you guys thinking about it?
So we actually take a lot of data from the brand itself, and we augment it using our AI. So the way it works is we will take the information from the brand and we'll ingest into our video generation model. And our video generator be able to analyze all the information and be able to generate very personalized, tailor-made advertising content for each brand. And we take data privacy and trust and safety very seriously, and we have very strict content moderation rules to make sure all the data are used properly.
Is there a sense, though, Yinan, and when we talk about the use case for this, what do you think the trust level for users are going to be? So we use this example of the Arizona Supreme Court, and it's a certain practical application. There's been other cases where people have tried to use AI avatars in courtroom functions without necessarily informing the court that they were using them. That's led to a lot of laughs, but it's also raising about a question about what I can believe with my own eyes. How do I know what's real when I see AI has gotten so good?
Yeah, AI definitely making a lot of change to how advertising world works. And the way we use it is we use AI to really empower a lot of business, because traditionally, for a small business owner, if they want to run video advertising, it costs thousands of dollars, 2 to 4 weeks, and it's very cost prohibitive. With Creatify, we actually can empower them to be able to create a video ads within minutes and be able to grow their business. So what we do here is really to empower entrepreneurship, empower business, so they can actually focus what matters to grow their business. So that's also the vision of Creatify.
But Romain, it does. Well, listen, it does raise a point here, which is, should there be guardrails? And the answer, I believe, is yes. But of something that is so young and is evolving so quickly, the balance here is between extraordinary speed of innovation and protection. And whether it's protection around copyright or it's protection around truth and fact, these are super important issues, and I don't know that we have the answers yet, but clearly there need to be some guardrails.
I want to, let me go in the creative space, particularly given your background, Jeffrey, obviously founding DreamWorks and your time as a chairman of Disney Studios back in the day, kind of when movies were made still the old-fashioned way. And we've seen the evolution of technology and now artificial intelligence in movie making as well. There was recently an interesting use case, particularly in the latest release of Fortnite, and the use of AI with some of the voices in there. I don't know what the business terms of that were, what sort of contracts were signed, but it seemed to raise a lot of hackles about fair use, about transparency of use. And I am curious, particularly in the creative fields, how you see this evolving. I know it can be complementary to the human creative, but will it be? Will we as humans be willing to accept that?
Well, that's on us. I mean, I would say to you, yes. And it's interesting because if you go back and you look at how, the evolution of these, tools, you look at animation going from a 2D business into, a CG business, hand-drawn into state-of-the-art computer animation, was an amazing disruption. And yet animation today is bigger than it's ever been. And there are more people employed working in it than ever before. The jobs, some of which have been reinvented, some of which are new, some of which have gone away. But it has absolutely been a tremendous positive impact on the business. And so I look at what's happening today. I don't think this is an evolutionary moment. It's a revolutionary moment. It's impossible to see these incredible new releases, whether it's VO3 coming out of Google or the things that we are seeing coming out of OpenAI and Anthropic. And it is breathtaking. It's happening so fast that I think there is anxiety of, can we keep up with this? Can we manage it in a productive way and one that protects, creative rights and all of the things that surround that.
Well, Jeffrey, to that point, no one would have seen this evolution coming in Hollywood, for example, right? it's been quite a ride. And COVID totally disrupted the industry also, so you got to add that on to it. Fast forward for me 5 years. What does Hollywood and the movie industry look like? In the AI world and in reality? Like, is it, we're all going to be watching bots on YouTube? Like, what is it?
I think it's many things is the answer to that, Alex. I don't think it is just going to be one size, fits all here. Do I think there are going to be movies and movie experiences? Absolutely. From anybody that went to the movie theaters this past weekend, the biggest, Memorial weekend in the history of the business with two incredible movies, yes, there's a future for that. People love that communal experience. On the other end of it, you see TikTok and you see what, creators are doing today, and YouTube has never, ever been bigger than it is right now. And so I'm very optimistic. I do think there are new forms of storytelling of which these tools are going to be accelerants to that, if not catalysts to them occurring. I don't believe it's the end of Hollywood, not even a little bit. I think probably just the opposite. Will it function in the way that it has in the past? Absolutely not. At the Walt Disney Studio, we had 130,000 frames of film, every single one of which was drawn by hand with a pencil, and then inked and painted by hand. And then Toy Story comes along, changes everything. And the outcome of it ultimately was great success for Hollywood, for storytelling, for creators, for business.
As long as we all know that we still need financial anchors on television, that's the important part. We never want to lose that. Yinan,
that's existential. It's not essential. It's existential.
That's right. There you go. Thank you, Jeffrey. I appreciate that.
As long as they have good skin care, which I learned about while we were waiting for you, I think that's an important perk that needs to go with the job.
I think it's important. I think there should be a budget for that. Yinan, to put this into perspective, talking about utilizing AI in many different forms, it's a yes and, it's not an or. Who are some of your customers right now? What kind of brands use your product, and how are they using it?
Yeah, we have a range of different customers, from like SMB owners to like marketers to agencies. And recently we also got amazing traction from like very big brands like Alibaba, like Zongpers, like Hotspot, using our tools. So really like serving them with their marketing needs, and also all their performance marketing team are using our tools.
And how do you expect that to grow? Like, what other kind of brands are you targeting, and what's your pitch to them?
So basically, we started out by building this like AI ad maker, which is a video creation tool. But now we actually evolve into an end-to-end video ad solution. Now we not only helping brand with just ad creation, we also help with the ad research, which is before the creation, and after creation, we help them to deploy to different platforms and doing the optimization. So really, it's a one-stop shop for all your performance marketing needs.
So Yinan, just tell us here, I'm going to give you the final word here. Where does this go next? I don't mean just for Creatify, but overall. You've built something cool, you've raised some good money. Obviously, you got a long way to go to sort of get up to the heights that we've seen with other companies in this space. But when you look at the foundation that you have, you look at the adoption of AI and AI-adjacent technology, what do you see as the future?
We see the future is there are going to be like a very intelligent AI ad agents, which pretty much can automate everything along the performance marketing journey, right? You can think of like the best teammate who is specialized in paid ads can take care of everything from like the inspiration to the creation to the delivery and the final optimization, and it can do it continuously. So really, we're gonna free like marketers, like brands, from like the manual, tedious work, and let them to focus more higher order tasks, right? Doing the designing, the messaging, or grow their business. I think that's the vision we are envisioning at Creatify.
We really appreciate your time today, both of you. Thank you so very much. Good luck with all of that. Please come back and let us know how all of it is progressing. Jeffrey Katzenberg, founding partner of Wndrco. He's going to go out and get some skincare in just a second. And Yinan Na, co-founder and CEO of Creatify as well. In the markets, though, the S&P might be holding up, Romain, but we're taking a look at software stocks really rolling over.
Yeah, Cadence Design right now down 11%, Synopsys down 12%, Keysight's down 3%, and Ansys down about 6%. This on the back of that Financial Times story that says that the Trump administration administration has ordered U.S. chip software design companies to stop sales to China. Now, we don't really have a whole lot of information about this, of exactly what's happening, when it's happening, or why, but the reaction in the market very swift. And of course, this all comes ahead of some big earnings by one of the biggest chip makers, in the world, Nvidia.
But also, what have we learned? Buy the dip has been the name of the game over the last few months. All right, we're going to take you to the bell 15 minutes away. Paul Christopher, head of global investment strategy at Wells Fargo Investment Institute. This is The Close on Bloomberg.
We've seen a little bit of a decoupling between Nvidia and the rest of the market. And I think that's actually a really positive thing. We can't have just one or just a handful of names that continue to dominate year after year. So even though breadth is still struggling right now, what we've seen is that some other areas of the market have been able to kind of shine a little bit during this period of uncertainty.
Kara Murphy over at Kestra Investment Management. Breadth certainly struggling on this day. The equal-weighted S&P 500 lagging the cap-weighted index, but everything right now, Alex Steele, in the red.
Yeah, it really depends on what we're going to see from Nvidia. Does it affect the overall index or really just the Mag 7 there, Nvidia stock, just down 0.2% ahead of earnings?
Yeah, and we should point out, too, it's not just Nvidia today. Obviously, we know they're going to suck all the attention out of the room, but you got HP, Synopsys, Salesforce, SentinelOne, as well as C3 AI and ELF.
Right, and well, ELF, exactly. Invest in your face. Even bringing up Synopsys, you can take a look at the FT report that potentially President Trump is saying that U.S. chip, not manufacturers.
Chip designers,
software, thank you.
Yeah.
Software designers can't sell their product anymore to China, and those stocks taking a really big hit, which brings back the headline risk when it comes to D.C. Paul Christopher, head of global equity allocation when it comes to Wells Fargo, joins us now. Hey, Paul, we learn that this is a threat and then you buy. So when we get these headline risks, is it just a buy signal at the end of the day?
No, not really. You have to be more careful than that because, look, at the end of the day, you get these news items that come in. First, it's a tariff threat. Then the tariff threat goes away and it's a 90-day pause. At the end of it, you're still going to have significant tariffs. You really need to focus here on quality in the S&P 500. That means companies with good balance sheets, good cash flow, and really good earnings prospects. We like information technology in that regard.
Okay, so does that mean that they're exempt from tariffs or they're free from tariffs or they can manage it because of that free cash flow?
Well, I don't think anybody's really exempt from tariffs. You'll get some ripple effects or some indirect effects. But look, what we've seen from earnings so far this season, this first quarter season, is that guidance is saying, hey, look, we're getting demand from all sorts of people. Sovereign AI demand. We're seeing demand from companies that want to start doing more inference with AI, and we're going to see more and more companies turning to automation as a way to offset their more direct and negative tariff implications and effects, and that's going to help drive IT and communication services as well. We also like financials and energy, but my point is that there are companies we think in sectors that will benefit. Actually, that's what you want to look for here.
I am curious, though, about just economic conditions, Paul, particularly when it comes to consumer spending. I know it's held up pretty well, certainly defying a lot of expectations. And we got some earnings this morning out of several retailers that were relatively positive, certainly more positive than what folks expected. Do you anticipate, though, that as we get deeper into the year, we should at least prepare ourselves that the consumer side of the equation might not be as strong?
Yeah, you definitely want to do that. The way we think in June, this is the eye of the storm. We saw the first part of the storm. It was pretty big in April and into early May until we got that second pause, the one for China. And then now we're in a kind of that pause period, the eye of the storm. But come July, we're going to have the 90-day reciprocal tariffs for most countries go off. I think it's July 9th. Then August 12th, we have the China reciprocal deal. That is expiring, so they need a deal by then. And somewhere between those two dates, we're likely to see Congress come up with a pretty big stimulus package that's going to increase the deficit, and that's going to worry the bond market, and that will then spill over into the stock market. So there's plenty of room for volatility here. Now is a time to take these to stock portfolio with the S&P still near 6,000. That's our year-end target. You want to take the opportunity to figure out what you want to trim, and you want to trim things that are going to be more vulnerable when we get to that back end of the storm.
But if I'm looking at my portfolio, and I'm thinking more from the perspective of an individual investor, and you're taking a look at your portfolio, some of the concerns going forward, some of what we've already seen going backwards, is there not a case to just simply be defensive? And I'm not saying your whole portfolio should just be like, bonds or anything, but I mean, what is the advantage of going after anything that maybe could be vulnerable to economic conditions, tariff conditions, political conditions?
Well, because what we foresee into the end of this year is that you're going to have the back half of that storm that I just mentioned, probably in the third quarter. But by the time we get to the fourth quarter, you're going to see some of that stimulus kick in, stimulus that I mentioned a minute ago in the federal budget. You're also going to see deregulation start to really gain some momentum, and it needs some time to really have a noticeable effect on cost structures. And then you're going to have the end of the year, and people will be spending money, and the inflation will cool the economy, and you might have a Fed rate cut in there. So by the time we get to the end of the year, we see several cushions for the economy as it deals with the fallout from the tariff. So you don't want to just go defensive. You want offensive defensemen, in a sense. That is to say, companies that will hold up well, high-quality companies, sectors I mentioned, IT, comm services, energy, financials, those we think will hold up better during the back half of this storm. But then we want to go into 2026 looking for a shallow cycle and a recovery. Our target for year-end 26 is 6,500 on the S&P. So we don't want to just go defensive. We want to be in those sectors that will cushion us on the way down and then provide us the leadership back on the way up in 26.
I give you credit for having a target for 2026. That takes a lot when we just have so much uncertainty. What are you avoiding right now?
Really want to avoid some of the high cyclicals, like industrials. I mean, look, think about what's going to really get hit by tariffs. It's going to be industrials. It's going to be consumer stocks. Those are the ones that are mainly in the crosshairs. Everything else is mainly going to have some diluted or a spillover or ripple effect. So industrials, don't want to get favorable on those right now. Consumer discretionary, don't want to get favorable on those right now. Stick with the sectors that we mentioned and use this opportunity here with S&P near 6,000 maybe to trim some of those sectors that we would be a little bit reluctant to take, an overweight in. Trim those and use the cash elsewhere.
Paul Christopher, head of global investment strategy at Wells Fargo Investment Institute, counting us down to the closing bells. Those bells 3 minutes away, with stocks just a few minutes ago hitting session lows. We should point out the S&P, the NASDAQ, Dow, they all opened higher on the day, but they never really had any meaningful gains on the day. But we're seeing a big drag now, and it's coming from tech. Microsoft, Tesla, Amazon, really dragging it down. But your biggest percentage decliner right now in the index, at least in the S&P, is Cadence Design, down about 10%. Nvidia down fractionally.
Yeah, and at least with Cadence, we have an actual news peg for that. But overall, volume is really light. And I have to wonder, I know we've been saying it could all depend on Nvidia, but will it, though?
I don't know.
Take a look at the options market, like you talked about earlier in the show. We're just seeing a 6% potential move versus 8%.
Absolutely. And I was listening to Gina Martin-Adams on another Bloomberg program, and she was talking about how Nvidia's importance to the market has lessened. It's still important, still the second highest rating, but not necessarily what it was a year or two ago. As you get closer to the closing bells, a full breakdown of all of today's market action starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele, taking you through to that closing bell, a global simulcast. It starts right now. Scarlett Fu in the TV studio, Carol Massler, Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube, as we watch stocks hit session lows into the close ahead of a big earnings report by Nvidia.
Yeah, I don't know whether I'm just reading into something. It feels a little ominous as we get ready for Nvidia earnings. You've got Nvidia now down just a hair. That's the big one, but it is interesting to see some selling here into the close.
It's not the only company reporting after the bell. In just a couple of minutes, we expect to hear from Salesforce. We'll hear from Synopsys, HP Inc., C3AI, Elf Beauty, and others too.
Yeah, this feels like the last hurrah of this earnings season. Once Nvidia is through, and I know I'm getting ahead of myself here, what's the next catalyst for this market that feels very much even as it melts higher, range bound.
Here, how about more restrictions from the Trump administration on different sectors? So the latest, according to the FT, is that the chip software designers need to stop China sales, and that obviously is why Synopsys is getting hit pretty hard. But again, we still have that tumult when it comes to headline risk.
Synopsys down about 10% right now. It is bouncing off the lows, but a huge drawdown here on that name. Cadence Design down 11, Keysight down about 2, and Ansys down about 5%. We should point out that when you take Synopsys, Cadence, and then the U.S. business of Siemens, that accounts for about 80% of the market here that Trump is said to be targeting based on that Financial Times story. Let's walk you through the closing bell numbers as we await these earnings reports. As we get the bells in New York, the Dow Jones Industrial Average down more than 200 points, or roughly about 0.6%. The S&P down about 30 points or so, or 0.5%. The NASDAQ Composite and NASDAQ 100 each going to end the day down roughly about 0.5 percentage point on the day, while the Russell 2000 lower by about 20-something points, or 1% on the day.
All right, quick headline crossing. Tesla said to target the robo-taxi launch in Austin on June 12th. So we know they sometimes put out targets. Sometimes they make it. Sometimes they don't. Back to the big market. S&P 500, most names lower, remain 421 to the downside.
All right, let's take a quick look at the IMF. It's pretty straightforward. Red all around, all 11 sectors finishing in the red right now. The biggest decliners are utilities, materials, and energy stocks. Those are basically unchanged. Real estate investment trust, communication services, and tech.
All right, to some of the individual gainers as we wait for earnings to cross among some companies, including Nvidia. Hey, Abercrombie & Fitch, definitely a standout, 36%. At its intraday high, finishing the day with about a 15% gain. First quarter comp sales and adjusted EPS did top consensus estimates.
Hollister.
I know. Well, Tim's been shopping there. I don't know about you, but
I'm too old for Hollister.
No, I'm too old for Hollister.
No,
I was told by Mary
no
Ross Gilbert
Hollister.
this was a Gen Z. Hollister's Gen Z. So.
Tim, you're among friends. You can share.
What else you got, Carol?
Joby Aviation. Check this out, guys. Up 29%. Toyota Motor investing $250 million in the company. It's about a $7 billion market cap. I didn't know if you knew that by now. Air taxi maker completing the first half of a previously announced $500 million commitment. So the move makes Toyota the largest shareholder in Joby. And then Vail Resorts. We broke down the earnings after the close yesterday, folks. Up almost 9%. Executive Chair Rob Katz is coming back to the company, to the CEO post, succeeding Kirsten Lynch, who has stepped down from the role. I mean, we talked about this. Tim knows this company. We talked about it yesterday. Investors took this as a big positive, as this guy is someone who has really kind of changed how you look at some of the ski slopes. And of course, the Epic Pass introducing that. So kind of changing it and maybe hoping to help juice the company going forward.
All right, some of the gainers as we do wait Nvidia numbers. I got some of the decliners. I want to start with Okta reporting after the bell yesterday. Shares fell more than 16%.
Hey, I'm just going to interrupt you. Sorry,
yeah, go ahead.
Salesforce earnings crossing the wire right now. The company reporting first quarter adjusted operating income in line with estimates, about $3.17 billion. Sales overall, 2.13. The street on average was looking for 2.16. So a modest miss on the headline sales number. Revenue still was up about 7.6% in the period. Adjusted EPS, $2.58 a share. That is a modest beat. The street was looking for about, I'm not sure what the comparison is with the street, but it's reported $2.44 in the year ago period. Here's your forecast going forward. The company says that for the full year, it does see revenue of $41 to $41.3 billion. That's above its previous guidance of $40.5 to $40.9. So a modest bump up in its full year revenue forecast here. The company also saying that it sees no impact to its full year guidance with regards to that Informatica deal, which of course we reported a couple of days ago.
Yeah, shares to the upside right now by about 4%, bouncing around a little bit. Mark Benioff, chair and CEO, saying, quote, "We built a deeply unified enterprise AI platform with agents, data apps, and a metadata platform that's unmatched in the industry." Back to a couple more decliners as we do await to hear from more companies reporting results after the bell. Okta falling 16%. Stellantis also falling today, down 3%. The company did come out and name Antonio Filosa as its new CEO. Antonio Filosa, a company veteran with U.S. experience. The attempt here will be to reverse the company's slump in the U.S. market due to an aging lineup, model delays, and pricing blunders. Bernstein said that there was some disappointment, likely some disappointment, that the board did not choose an outsider, though Filosa is still seen as a, quote, safe pair of hands. And finally, GameStop falling by about 11% today. The company did announce that it bought more than 4,700 Bitcoin. It's the video game seller's first Bitcoin purchase after announcing in March that it plans to become a treasury reserve asset, a cryptocurrency treasury reserve asset, following the model set out by Michael Saylor over at the company formerly known as MicroStrategy.
Such a head scratcher. Real quick check-in on the bond market, guys. We saw selling pretty much across the curve, but pretty tame. The 5-year auction went down with not a lot of fanfare. So you see the long end, though, just up by about 3 basis points. Going back to Salesforce here, the company actually raising its full-year revenue guidance to the high end of $41.3 billion. The company originally saw $40.9 billion on the high end. They're also looking at a currency tailwind now, and they're taking a look at that guidance. And some interesting data when it comes to AI. They said that cloud data and AI annual recurring revenue is now over $1 billion, which is up more than 120% year on year.
And this gets to the idea, too. I mean, we were just talking on the close, guys, a little while ago with Paul Christopher at Wells Fargo about the investment opportunity. We heard this from Kara Murphy as well. The idea that some of these large cap tech names are, in their view, not just growth stocks, but to a certain degree defensive when they consider how much cash that they are able to throw off. And you see right now, CRM up about 5%, Scarlett.
All right, let's go in the opposite direction from tech to a consumer staple. Elf Beauty reporting results, and we're looking at a fourth quarter adjusted EPS of 78 cents, beating the consensus estimate by a nickel. As for revenue, $332 million, also higher than what was anticipated, which was about $327.4 million. In addition, Elf Beauty buying Rode in a $1 billion deal. It's a definitive pact to buy Rode, and we'll try to get you more details on this, but for now, making a big M&A announcement in addition to beating estimates.
That's Hailey Bieber, right?
That's Hailey Bieber, and I think it had been being shopped around a little bit, so interesting to see that they picked it up, right? And this is what we see with the major makeup companies, right? Whether it's Estee Lauder, whether it's all the other ones that are out there, you know, they pick up these smaller brands. All
right, guys, take a look at Synopsys here. So obviously that stock got hit into earnings due to the FT report that President Trump is ordering U.S. chip software suppliers to stop selling to China. In the actual numbers, though, taking a look at its second quarter, adjusted earnings coming in better than estimated. Their revenue also up 10%. Their full year adjusted earnings is also increased on that high end. They still see their full year revenue a little bit higher than estimated. So they reaffirm their full year revenue guidance and they increase their full year earnings guidance, and they wound up beating on the second quarter. However, you see the stock now sort of flat pre-market, not doing that much, but recouping some of that drama that we saw into the close today.
All right, guys, we got a software, cybersecurity or security software company just reporting. We're talking about SentinelOne, and let's get right to the outlook. See second quarter revenue of $242 million. That's about $3 million light. The estimate on the street was $245 million. Also talking about fiscal year revenue forecast, $996 million to $1 billion. It had seen numbers above that of $1.01 billion. So again, that one was a bit of a miss. It also approved a $200 million share buyback program, but you can see investors not too impressed, folks. The stock is down 9% here in the aftermarket.
All right, let's talk life sciences. Agilent, of course, makes equipment for the biotech and life sciences industry, as well as a lot of the ingredients that go into pharmaceuticals. Net revenue coming in at a beat, $1.67 billion. The street was looking for $1.63. Adjusted EPS also beating $1.31. The street was looking for $1.27. Here's your guidance for the full year. The company says that full year adjusted EPS will be in the range of $5.54 a share to $5.61 a share. That's above the average of analyst estimates, which were looking for 5.55, and says that for the full year revenue will be in the range of $6.73 billion to $6.8 billion. That's a bump up from the previous guidance that it had given about a quarter ago.
Okay, speaking of life sciences, the cloud provider for life sciences, Viva Systems, up 10% in the after hours. The company boosted its fiscal year adjusted EPS forecast. First quarter adjusted gross margin coming in above estimates too at 79.2%. First quarter adjusted operating income coming above estimates at $350 billion. First quarter adjusted gross profit also beating expectations at $600.8 million. The company does see second quarter revenue coming in at between $766 million to $769 million, beating estimates of $750.8 million. Shares higher by about 11% as we speak.
All right, we are still awaiting those results out of NVIDIA, a closer look at what's going on in the AI space. Meanwhile, a smaller AI company, C3 AI, is out with its results. And the headline here is actually an expansion of a partnership that it's had with Baker Hughes. They're expanding that joint venture through June of 2028. The company also reporting earnings. It looks like they're beating on both the top and the bottom line. Those shares up about 15% in the after-hours trade.
All right, guys, that's a wrap. Our cross-platform coverage, a lot of earnings, and we're still waiting on Nvidia, which in the aftermarket is just up about 0.5%, but waiting for them to cross in about 10 minutes' time. That is a wrap. Radio, TV, YouTube, Bloomberg Originals. We do it across the platform. I know, Alex, I think you're heading out. Scarlett and Romain, of course, continuing there on the TV side, and Tim and I are going to continue on the radio side as we wait for those Nvidia earnings. Guys, we'll see you again, same time, same place tomorrow.
And we are awaiting those results from NVIDIA, which should come within the next few minutes. A full breakdown of what happens, a full breakdown of what could happen next. That's coming up here on The Close. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romain Bostic. Markets moving lower here on the day. The S&P, the Dow, and the NASDAQ did open higher. They never really had any meaningful juice, as a lot of people were standing by waiting for NVIDIA. A bit of a sell-off as we got closer to the close, largely because of some headlines regarding potentially additional restrictions on U.S. technology sales to China. You see the Philadelphia Semiconductor Index closing out the day down about 0.6%. Discretionary stocks down about 1% on the day, though we did see some more positive moves on some individual names like Abercrombie and Macy's.
All right, let's take a look at some of the movers in after-hours trading following the latest results out of Salesforce, up more than 5% after its second quarter revenue forecast beat analyst estimates, and the full-year revenue also got an upgrade, too. Synopsys recouping some of its losses from earlier in the day. It had boosted its full-year earnings per share forecast and also reaffirmed its full-year revenue forecast. But of course, earlier in the session, it did fall because of the Financial Times report that the White House will restrict sales of chip design software to China. And SentinelOne losing ground by 12% right now. The software company cutting its full-year revenue forecast, which missed analyst estimates. Now, our top story this hour, of course, is Nvidia. The poster child of the AI investment thesis reports earnings in a couple of minutes, and the report represents the final test of an earnings season-driven rally that has lifted Nvidia shares by more than 40% since the lows in early April. We know the AI narrative has lost some of its potency in the face of Trump's constant tariff threats, announcements, and reversals. And Nvidia is now caught in the crosshairs of the China trade war, with the White House curbing sales of the company's H20 chips to that market. Still, you look at Nvidia, and it does remain one of the most compelling growth stories out there, and in fact, perhaps even more irresistible because its valuation relative to expected earnings trades at a discount to its 5-year average.
John Belton joining us right now, portfolio manager and managing director for growth portfolios at Gabelli Funds. And there really is no more important growth stock out there at that. Nvidia expecting revenue to come in $43 billion, 66% growth rate, which is a deceleration, as I'm sure you know. And a lot of questions right now about how many of these new Blackwell chips they were able to get out the door. What are margins going to look like on that, given some of the disruptions that they had in trying to manufacture those chips? What are you expecting to hear? What do you want to hear that would make you, or at least keep you bullish?
Well, I think, thanks. It's nice to be with you, Romain.
Yeah.
I think it's been quite a roller coaster for NVIDIA shareholders over the last quarter or so. It feels like it's been years. We had DeepSeek. Mm-hmm. We had the China ban on H20 exports. And then more recently, we've had a lot of noise coming out of the Asia supply chain about potential difficulties manufacturing some of the new server racks, some of the new Grace Blackwell 200 server racks. So, I think at this point, as Scarlett was mentioning, the stocks had a big move from April lows. I think the market is now comfortable with the China risk has been quantified. I think there's been more and more encouraging signs coming from the supply chain that things in terms of the Blackwell scaling are going better now. Yeah. So I think, the street's modeling revenues for the current quarter in line with guidance. Yeah. They've been steadily beating guidance historically. Yeah. I think we could see a smaller beat than normal. There's going to be a lot of focus on the July quarter guidance.
Before before we get to those NVIDIA earnings, I just want to point out to our viewers, HP Inc. is now reporting earnings. Of course, this is the maker of the computers and the printers. That company shares dropping by about 15% in the after-hours trade. The company is basically saying that for its second quarter here, operating margins did slip to 7.3, down from 8.2. Adjusted EPS missed estimates at 71 cents a share versus street estimates of 81 cents a share. And net revenue came in relatively in line at about $13.2 billion. But here's your guidance going forward. The company says 3Q adjusted EPS will be in the range of 68 to 80 cents a share. The estimate on the street was for 91 cents. On the revenue side, the company is saying, just skip the revenue side for a second. We'll just stay on the EPS side. The company is saying that for the full year, adjusted EPS also will come in below street estimates, a range of $3 to $3.30. It had previously had a range of $3.45 to $3.75 a share. So a big part of the reason, probably, Scarlett, why you're seeing those shares move lower.
All right, we'll continue to keep an eye on that stock. But I want to go back to John and on Nvidia, which is due to report in just a few minutes, 3.5 minutes or so. There's some concern that the market has not fully priced in the H20 restrictions to China because in many ways there is no offset to this. Even if you continue to create Blackwell chips and can meet those production requirements, that doesn't result in any more sales.
Right. So, the H20 piece, I think, has been pretty succinctly quantified by Jensen Huang, actually in a podcast, I think it was last week. He quantified that as a $15 billion revenue headwind. It was a $5.5 billion inventory write-down that they reported in an 8K last month. But $15 billion revenue headwind, I think we can assume roughly half of that could be coming out of the July quarter, with the balance likely in the October quarter thereafter. So, I think that is going to be kind of, call it a mid-single-digit billion-dollar headwind to July quarter revenues. So, yeah, I think, it looks like the sell side sort of consensus estimates for NVIDIA revenues in the July quarter may be a little high, but I suspect that investors are already braced for, that H20 headwind. They're also reportedly, I should say, in discussions about launching a separate China-compliant product. So that's not in estimates. That could be some offset to the lost H20 revenues.
So that's interesting. I'm wondering, John, how much detail you think the company will be able to provide at any given point, because we're talking about moving targets, moving goalposts.
Unlikely they're going to say much on China, would be my opinion. And I think most long-term investors for NVIDIA, this is not that big of a concern. Yes, it's going to impact short-term numbers. It's going to impact trading, maybe how the stock trades today, tomorrow. But really, as a long-term investor, I want to hear about the end user demand. I want to hear that cloud service provider demand is strong. I want to hear that consumer internet companies continue to grow usage. I want to hear inference use cases are broadening out, reaching more verticals, things like that. I think we will hear that. So for that reason, this could, famous last words, be a more of a non-event type of NVIDIA quarter than we may be used to.
I am curious, though, on the China. There's been a lot of talk about that if something can be negotiated with China, that this could be a big boon for NVIDIA. And I know that's kind of a long shot, at least based on where we stand with trade relations, but it's certainly not out of the realm of question, particularly given the relationship that, at least we know publicly, Jensen Huang has with this administration.
I think Jensen has made a really compelling case for being able to continue to operate in China. You'd rather, even the H20 experts estimate has a 1 to 3 year head start on the state-of-the-art, leading-edge Chinese AI processors. So I think you'd rather have a U.S. company continue to set the standard in China, and you'd rather have AI developers be developing on U.S. tech stacks in China. So I think that's a compelling argument.
I mean, who's going to be their most important group of customers, I should say? Because I know we focus a lot on the data centers and the hyperscalers and that, what's the expansion? Is there a universe of customers out there much beyond
NVIDIA
that?
just came out. We have the numbers crossing, just to jump in, sorry about that. First quarter revenue, $44.1 billion, better than what analysts were expecting, which was $43.29 billion. That is, of course, a slowdown from the preceding quarters. First quarter adjusted EPS, 81 cents. Analysts were looking for 93 cents, so that is a miss. First quarter data center revenue, $39.1 billion. Analysts were looking for $39.22 $2 billion. In addition, first quarter adjusted gross margin, 61%. That is 10 percentage points below what analysts were looking for, which was 71%. That's something that the company had already guided us towards. In terms of commentary from CEO Jensen Huang, Blackwell NVL72 AI supercomputer is in production, and the second quarter outlook that it's giving reflects a loss in H20 revenue of about $8 billion.
I think it's also interesting, too, when we talk about that forecast, really the focus that they are putting on some of those operating expenses, an increase in those operating expenses, $5.7 billion and $4 billion on a GAAP and non-GAAP basis. And this, of course, was a big part of the conversation here with regards to some of those hiccups and getting those Blackwell chips out the door. The idea here that was raising their costs. We should also point out, of course, the company in the press release, as always, talking about that laudatory future of what we're going to see in the AI space, what it calls a thinking machine with regards to the breakthroughs in that Blackwell NVL72 AI supercomputer, and how he sees Jensen Huang, quoted here in there, as incredibly strong and potentially a big force for future growth and transformation of the company.
All right, so a lot to dig through here as we look at Nvidia shares, currently up about 2.5% right now. I want to thank John Belton, Portfolio Manager and Managing Director for Growth Portfolios at Gabelli Funds. Thank you so much for joining us today. And I want to bring in our next guest, Matt Bryson, Managing Director of Equity Research over at Wedbush Securities. Matt, you heard us go over the numbers. What jumps out at you?
A few things. The loss of revenue to China. They're talking about an $8 billion headwind there. I think that's a little bit worse than people expected. I mean, having said that, the fact that that number is so big and they're still holding revenue steady, I think is really impressive. The other thing I'd point to is the gross margin line. Gross margins are going up. I would have expected that China revenue would also have a higher gross margin. So they're also working against that gross margin headwind and still able to improve gross margins. I think those are the two things that really stand out to me.
All right, I'm going to follow up on what you said about gross margin, because the reported gross margin on an adjusted basis for the first quarter was 61%. Analysts were looking for 71%. And the goal, according to the CFO, was to get the gross margin back to mid 70% range by the end of the year. Are we still on track for that, do you think?
I think so. Just again, that it's really the adjusted margin, right? So you need to take out the headwind from them writing off inventory to get an apples to apples comparison. And it looks like gross margins are moving up again. And I'd also would point again to that China headwind. That was a product that wouldn't have been affected by the difficult ramp of Blackwell. So ostensibly would have had a higher gross margin contribution. So that going away becomes a bit of a headwind. The fact that they're working through that and growing gross margins, I think, is a great sign for the company.
Is there a sense here, Matt, when we talk about the development costs that have gone into it? I know there was some concern. Is that kind of behind it? I know there's still ongoing costs that are always going to be associated with, but kind of that bulk, that front load of that, is that behind the company now?
And sorry, you mean the development costs
for the Blackwell? Yeah.
Yeah. So my understanding is once we got past January, February timeframe, things really started to improve. And so since that point, I think they're seeing yields improve at TSM. I think their customers are having fewer failures. And so all of that helps them on the gross margin side of things.
So when we talk about what the company will try to articulate as far as for the long term, I don't just necessarily mean for the next couple of quarters, and we have to wait for the conference call, which is at the top of the hour. What exactly do you want them to articulate? Is it selling more Blackwell? Is it a broader universe of customers beyond what we have? Is it some sort of easing of U.S.-China relations that would allow it to penetrate that market? What?
So, it's really hard because Jensen's always so positive about the future of AI. Now, having said that, the concerns have always been, what does spending look like next year? Where do applications using AI show up, particularly given all of the spending that's happening to support AI? And I think that there are a couple really positive messages there, and I think we'll talk about agentic AI, creating those use cases. And then in terms of spend, I think they can point to all these new contracts that have been signed with sovereign nations over the last month, 2 months, 3 months, as being really additive to that hyperscale base that supported them, and also highlighting exactly how important the world sees AI as being.
Hey, Matt, I'm just going to interrupt you for just 1 second here. We need to correct a few numbers. Scarlett, why don't you go ahead here? There are a few numbers that had crossed the wire a little bit earlier. There are a few corrections to that, and we just want to make sure we're very clear on what these numbers are. Scarlett.
Right. So I'm looking at first quarter adjusted EPS. 96 cents is the reported number. Analysts were looking for 93 cents. So by that metric, we are looking at a beat for the first quarter. Again, this is for the quarter that ended. First quarter adjusted gross margin was 71.3%. Analysts were looking for 71%. So that is slightly higher than anticipated and pretty much where the company guided to. In addition, the first quarter data center revenue also meets analysts' estimates as well. So again, a couple of corrections here on the first quarter adjusted EPS, adjusted gross margin, both coming in higher than anticipated, and data center revenue meeting analysts' estimates. Matt, in terms of what Jensen Huang is likely to say on the conference call, what kind of detail do you expect he is able to go into when it comes to the outlook here for China?
I think certainly they'll reiterate that they don't expect to sell the H20 into China. Right? We've seen the write-off, so they're kind of stuck there. Obviously, there have been press reports about a potential successor to that chip based on Blackwell architecture. I don't know whether they'll go in depth around that. They have talked in the past about having given up only a portion of the China opportunity. So you could see them come in, or him come in and talk about, with the new restrictions, this is how much of China we can capture. But I also suggest that at this point, when you look at, not consensus necessarily, because, for instance, I haven't adjusted my estimates, but when you look at street estimates, I think there's been an assumption out there that they might not get any revenue from China. And so if they're able to give any kind of optimistic outlook about the potential for some revenue moving forward, I think that would be looked at positively.
Yeah, I just want to point out, too, a couple other numbers here. We're talking about a company still sitting on more than $50 billion in cash. I know no one really cares about the other units anymore, but if you do care, the gaming and AI PC business did have a record quarter, $3.8 billion. That was about 48% growth. And just before we let you go, Matt, I want to go back to some of those deals that we kind of knew publicly already with regards to the data centers and AI business here, whether, of course, it was the deal with Humane over there in Saudi Arabia, with Stargate, of course, the plans to work with Foxconn and the Taiwan government to build an AI factory supercomputer, and as well as some of the joint initiatives they have with Alphabet and some of these other companies here. When we talk about the ecosystem, the Nvidia ecosystem and its reach, I do wonder if that becomes, I guess, for lack of a better phrase, the moat. That even if there is a slowdown in spending, this is a company now that basically has its tentacles in so many areas of the technology space that even if a competitor was able to sort of come up with a comparable chip, how long would it take it to even sort of release that grip that Nvidia has in this space?
Yeah, I think it would take years. And in part, it's what they've done with CUDA on the software side. So it's not just that they've built that software, it's also that there's a whole generation of AI specialists who've been trained on CUDA. When you think about all the penetration they've had in various places, that's hard to get past. And then you just look at it from a scale perspective. Nvidia, again, doing $45 billion last quarter, the bulk of which is data center. I mean, there's just no one close to that right now.
Matt Bryson, Managing Director of Equity Research over at Wedbush Securities. Right now, Nvidia shares still holding higher at about 3% here. Several beats on several key metrics here. Still some concerns about the forecast going forward, some of the profit margins, as well as big questions now here about what comes next. We built the large language models. We built out the data centers. And now a lot of people want to know where the real world applications come into play. Or are they already here? We want to bring in someone who knows a lot about this. The company Nvidia, and another name that's become synonymous with AI, and that's OpenAI. Let's bring Andrew Ng into this conversation. He's a managing partner over at the AI Fund. And Andrew, I do want to start off with kind of the evolution in this space here. Earlier we heard about this deal that Johnny Ive, of course, the famed designer over at Apple, his partnership with Sam Altman over at OpenAI on some sort of mystery device that may come. A lot of other companies have already already integrated AI or similar technologies into consumer-facing products, as well as to some of the products that we're seeing being used by businesses. We've heard banks and financial companies find ways to use this to increase productivity. AI is here. The big question right now is, how does this rollout continue from here? And is this a story about NVIDIA, or is it about someone else?
I think this will be a story in the long run about applications. People do build on NVIDIA chips and AMD chips and lots of other people's chips. And I feel like if you look at the business fundamentals, the value of AI is steadily growing. I think the hype has grown even much faster than the value, but the business fundamentals are pretty strong and getting better every month.
What becomes sort of that exponential growth? Is it sort of the idea that regular people like me need to adopt it? Is it the hyperscalers just building out their data centers, creating their chatbots, et cetera? Is it the productivity advancements that you get within the corporations that are implementing AI?
You know, this is such a great question. I think it'll be all of the above. One thing we're already seeing is large enterprises having AI applications supporting customer service, internal reasoning, internal work process automation that is valuable. We're seeing tons of startups building compelling new applications for legal document analysis, medical diagnosis, tariff compliance, and on and on and on. That is valuable. Then at the individual level, one of the most exciting things I'm seeing is a lot more people are learning to code with AI assistance. So you're not writing the code all by yourself. AI is doing most of it for you. And I'm seeing this hope financial analysts, CFOs, sales leaders, product people of all sorts of job roles and not software engineer becoming more productive. These are the early innings, but I'm already seeing this very clearly among a number of businesses, and I think this will grow.
And I'm glad you brought up that point, because I know that you are using AI-assisted coding software to help write business software faster. And it's on that point that I want to understand a little bit more. How does that condense, short-circuit the timeline here for creating the infrastructure that's needed to support new and young companies?
So it turns out that AI helps maintain and update legacy software. Maybe it makes your developers, 30, 50% more productive, which is great. But it turns out that in the case of rapid prototyping of new ideas, it's not 50% more effective. It's like 10 times or 1,000% more effective. So now when a small startup, or for that matter, a large business, has a new idea they want to prototype, you can now build a prototype so much faster than was ever before. I find that most weekends myself, I'm sitting in a coffee shop writing code myself with Gen AI, and I can easily build a prototype in 1 to 4 hours that 2 years ago would have taken me like three engineers in 6 months. So the speed of prototyping is incredible, and this is a new mechanism for businesses, small startups and big companies, to try lots of ideas, discard lots of them, but that's the way to very efficiently find the winners that really take off.
Does that prevent the need, or does that create competition for established enterprise software companies, those that are, kind of the industry standard, offer the industry standard to certain industries? Like I'm thinking about a Salesforce, for instance.
I think that the cost of software engineering is falling. Fortunately, the aggregate demand for custom software to be written has no practical ceiling. So as the cost of building software falls, is rapidly falling, I think we'll see a lot more software, a lot more custom software being written in the marketplace. So there are definitely lots of apps, in the various app stores that have taken people, like a year to build, that today someone could probably build something comparable in much short time, like a month or something. Yeah. So the question is, where are the moats? I think businesses like Salesforce, they control a lot of data, so there is probably a strong moat there. But as the cost of software falls, the dynamics will be very interesting.
I'm curious how fast this gets. Andrew, I heard you on another program, a podcast, and it was kind of going back to 2006, and you kind of were telling this story about how some of your students were telling you about this sort of general purpose programming language. And the idea that, it was an advancement, not so much just in the technology, but in the speed at which we can do things. You go from 10x to 100x to 1,000x to, 100,000x. That was in 2006. That was almost 20 years ago. And I do wonder, when you look ahead over the next 20 years, is this has this kind of broken every sort of thing that we know about the pace of technology? And I know Moore's Law has kind of become somewhat, if not obsolete, a little bit sort of irrelevant in the current capacity. But is this kind of the new phase where we have to start thinking about the pace of technological change and the growth that it can achieve?
I feel like some things are getting much faster. Writing software is getting much faster. But some parts have not really sped up. So at AI Fund, we find that we can build software faster than before, but figuring out what to build is still really hard. So after you write the software, still got to do the customer interviews, figure the go-to-market, figure the sales channel. Those things I have not sped up nearly as much as the ability to write software has. And I think that it's been very interesting watching the bottlenecks move around. So for example, I'm seeing more and more teams, in many software teams where product managers figure out what to build, software engineers then write the code. I'm seeing more and more teams say, boy, software engineering is so fast, we got to hire more product managers to help figure out what to build.
Yeah.
At a lot of businesses, the hard work of figuring out, now you have this very intelligent AI, where to fit it in, how to do the plumbing to get the data to where the AI needs, the reason to process invoices or the application, all that. It's still hard.
Hold that thought for 1 second, Andrew, because now Nvidia has released its 10Q. So there's a little bit more detail than what we get out of the press release. And they do address some of the issues with China, saying that they may be unable to create a competitive product for the China market, though it does expect to begin shipping the Blackwell Ultra in the fiscal 2026, second quarter of fiscal 2026, though China, of course, would not be on that. And that, in its words, and I'm not quite sure how to interpret this, China market foreclosure would materially hit its business. And I read those headlines to you, Andrew, because I am curious about this idea of us sort of sealing off the development of this technology on a country-by-country basis. And I know right now this is just U.S. versus China, but it does appear that we are starting to compartmentalize the development. And given your research, both in the private sector as well in academia, where sharing this information and sharing that knowledge has led to great technological advancements, I wonder if you worry that by having these barriers, that could actually slow the pace of progress.
So I am really worried about a couple things that the U.S. is doing. When ChatGPT was first released, the U.S. was decisively ahead of China and all the nations in AI. I think China has played its hand quite well in the last 2 years and, caught up or almost caught up. Jensen said, I think that export controls on GPUs are backfiring, and frankly, I think he's right. With the Biden-era diffusion rules, which we imposed on a lot of our allies as well, which is kind of strange, it made the world not willing to trust the U.S. to be a supplier of GPS as much as they did in the past, and to certainly incentivize China to really invest in becoming self-sufficient. Just a few weeks ago, there's the announced deal between Huawei and a private company in Malaysia, I think, and there was government involvement in Malaysia, which later said maybe they weren't as involved. But I feel like Huawei Ascend was really incentivized by American export control rules and Chinese government investment and Xiaomi investment and so on to really make sure they can have their own semiconductor supply chain. Given where we are now, I think the world now sees America as a less reliable supplier of technology than we were even, a year or two ago. And so I think I see a lot of nations, for example, wanting to build sovereign large language models so they don't need to depend on American or perhaps even Chinese suppliers. So I think it's unfortunate that we are where we are with the export control regime, but I don't think it's been helping to restrict other nations' ability to access GPUs that American companies were making.
All right, Andrew, thank you for sharing your insight there. Andrew Ng is Managing General Partner over at AI Fund. And just to recap some of the headlines that Romain was telling us about earlier, Nvidia says that may not be able to create a competitive product for China. This, of course, after the White House has put restrictions on exports of its H20 chip, which already is specialized for the China market. Nvidia also says it would have to foreclose from competing in the China market, and a China market foreclosure would materially hit its business. It adds that it is still evaluating its limited options to comply with the U.S. government rules and that export controls applicable to China are complex. So let's bring in Sarah Kunst, who is Cleo Capital Managing Director, giving us a little more insight here. Sarah, I recognize that we're giving you these headlines, out of context, but I guess my question to you is, how much do we still not understand about what the U.S. government intends to do with sales of U.S. technology to China? And by that measure, how much uncertainty is there around the growth potential for some of these companies? I mean, China represents a $15 billion data center market.
Absolutely. The reality is that there is uncertainty everywhere. We might know as much as the government does, right? Because a lot of these sort of tariffs, a lot of these bans feel like they're happening in real time. They're happening in sort of a reactive manner. And so it is very much kind of anybody's guess. That being said, one thing that I keep coming back to is that Jensen is not new to having to navigate the US and China. This was a problem with the last administration. He's somebody who understands the Asian markets incredibly, incredibly well, obviously. And so I think that he is probably the best suited CEO for this almost impossible task of guessing what two very mercurial superpowers are going to do on a day-to-day basis about where he can sell his product.
Oh, let me just correct myself. I meant $50 billion data center market in China by 2026. Sarah, I'm glad you bring up Jensen's ability to navigate both markets. Is there another CEO or is there another company that kind of is in the middle of all this in the same way that Nvidia is?
You know, I think obviously Taiwan Semiconductor, which has, long been one of my favorite names on the street, they're in Taiwan, so they certainly understand this well. You've seen a lot of their supply chain move out of Taiwan over the last, handful of years for sort of China-centric reasons, and now that's probably good for them as they navigate, the U.S. And so, yes, there are other leaders, I think, particularly who have a deep understanding of China, of the Asian market, and where this technology is going. The problem with the U.S. side of the equation is you can't really understand deeply what's going to happen because it changes day by day and there isn't necessarily a huge coherent strategy there.
Absolutely, Sarah. And I mean, I'm just going through this 10Q now, and we should just point out to our viewers, I mean, they are spending a lot of time in this 10Q, not only talking about the export controls on the U.S. side, but also, of course, a lot of the regulations on the Chinese side as well, as they call it, a very complex situation, almost way too long and lengthy to read here on air, but something I think every investor should check out. And I hope that Jensen is asked about this on the conference call at 5. I do want to ask you, though, about just the investability right now in this space beyond Nvidia. I mean, you run a VC fund. You've got several investments in AI startups like Forethought, Lighter, Athena, and a few others as well. When we talk about sort of the next phase of the AI trade, if you will, the AI investment trade, where do you think that success will be in terms of the application, in terms of the use cases, and of course, in terms of the companies?
Of course. I mean, I've got to talk my book, right? I have a really interesting range of names. Companies like Grok with a Q, not the Elon one, with a K. And they are a team that spun out of Google early on to make tensor processing units, originally for self-driving cars. And so they're doing some really, really interesting stuff at the chip level. And that's a name that, I see a ton of secondary interest from. I'm holding, but, I think that's a name that's going to continue to do really well. I have other names like Cobalt Metals, which is a Bill Gates and Jeff Bezos backed, really interesting company that uses AI for rare earth mineral mining. And so, they have been doing some really exciting stuff recently too. And so I think that the AI trade is here to stay. It's just that we've moved, I think, really far away from the sort of chatbots OpenAI of last year.
Yeah.
And now we're seeing more actual use cases.
Well, that's what I'm curious with some of these companies, and not necessarily the ones in your portfolio. I mean, I've seen quite a few that are basically just taking, OpenAI or something, throwing a software layer over that and calling it a new product. Are we getting innovation out of this? I mean, beyond the big boys that we know have actually created something new. Is there real innovation?
Yeah, I think there is. I think that there is innovation in terms of where the technology is going. I think that a lot of it day to day is going to be baked in, and we're not necessarily going to feel it. One of the funny things when people say, when is Apple going to get in the AI game is, what do you think Siri is, right? But we're so used to it on a day-by-day basis. Or when you Google, and even if you're not using Gemini, Google's AI solution, some of those snippets that you're getting at the top, the order in which they're ranking your questions, your algorithms on social media, that's all AI. The best AI is not something that has to sort of announce itself as AI. It's just whatever you're looking for, whatever you're doing is better, is easier, is simpler. And I think that that's the layer that people sort of take for granted, even though there's a lot of really interesting day-to-day innovation there.
Sarah Kunst, Cleo Capital, We appreciate you taking time for us as we keep an eye on Nvidia. Those shares higher by about 4% in the after-hours trade. We should point out 5 p.m. Jensen Huang begins his press conference. We should also point out we do have an interview with Jensen Huang that will actually occur later tonight here on Bloomberg Television at about 6:30 p.m. Eastern. As our coverage continues and we focus in on artificial intelligence and on big tech, we want to talk a little bit more about some of the scrutiny that is out there when it comes to actually training these AI models. Now, the U.S. Copyright Office this month actually rejected the idea that training these models on copyrighted works is inherently, quote, fair use. Joining us now to talk about this is Meredith Broussard. She's a professor at New York University whose research focuses on the role of AI in journalism. She's also the author of Artificial Unintelligence, How Computers Misunderstand the World. Meredith, great to see you again.
Great to see you.
We talk about this idea, and I want to go back. There was an interesting interview, I think it was back in 2024 with Sam Altman, where he was asked specifically about this idea of taking copyrighted data, taking IP and other things. And he kind of admitted in a roundabout way that they couldn't do what they are doing without effectively, and these are my words, stealing that data. But he does not see that as stealing. And I do wonder about the mentality that we have with some of these AI companies, their use of pre-existing data that's not theirs, and whether they built something that is truly proprietary to them, or should it necessarily be something for all of us?
Well, so I personally think that AI companies should be paying authors for using their work. Both of my most recent books have been stolen by generative AI companies and used to train AI models without my consent and without compensation. And ordinarily, when somebody reuses my work, I get royalties, right? So this is happening to hundreds of thousands, if not millions, of authors, and it is undermining the ability of authors to make a living. It's also unethical, though. So what I think is we should do is think about this extraction differently. We should think about what AI companies are doing as mining. And we already have rules for how do we deal with people who are going to extract things from the earth and then use them in factories and make new things, right? We have mineral rights. So we should think about the generative AI companies using the raw materials of authors in the same way.
One reason why I'm interested in this particular side of it, because when we start to get to this idea of actual AI products and the sort of these end use cases, particularly for regular folk, I do wonder what the quality of it's going to be if, A, they don't have access to some of that data, or if they are using data that, again, they're not necessarily paying royalties for, and then maybe that undermines the product down the road. If there's a lawsuit or something else that requires them to effectively strip that out, I don't know how you would do that. But it does create complications for these business models.
It creates a lot of complications. Another thing to keep in mind is that when companies say that they are erasing copyrighted works from their training data, we don't know that that's actually happening. Okay, we don't have validation that's happening. And we also know that when AI models are trained on AI-generated works, then the quality deteriorates even faster. Right, so all the AI slop that's being generated on the internet now, when that gets scraped and then fed back into the generative AI models, they deteriorate much faster. So yes, the Gen AI companies need copyrighted works, validated, truthful works in order to make better models. And they're panicking because they're running out. And they're also panicking because the Copyright Office has said this is not fair use. Now, in the comments to the Copyright Office, they have said, oh yeah, it's very economically unfeasible to go and track down all of the authors. To which I say, why don't you just use AI?
I'm curious to get your thoughts on what our previous guest just said. Sarah Kunst was just observing that the best AI is something that doesn't have to announce itself as AI. As someone who is an author, who is doing her own research, what's your take on that point of view?
Oh, she's absolutely right. We've all been using AI for years without realizing it. Every time you do a Google search, there's something like 250 different machine learning models that get activated. Or when you transcribe a Zoom call, you do that automated transcription. Well, that's AI. When you use Google Translate, it's AI. It's only in the past couple of years that people have started labeling these things AI. But something that's really funny is when you use AI, you expect it to feel special. Right? You expect it to feel like you're interacting with the future. But then you use something like ChatGPT or any of these other chatbots, and it just feels like using technology, right? And it's fun for like the first 10 minutes. And then you're like, oh, this is not that great.
It's not that great, and the results kind of speak for themselves in a way, too. It just lacks spontaneity. It lacks something original. It does its job, but maybe that's about it. Do you see or hear any policymaker endorsing your perspective that AI models training models need to be paying for the original content that they're training off of?
I'm not familiar with the dialogue in Washington right now, but I can tell you the dialogue in the writer community is extremely enthusiastic about the idea of authors being paid for their work. And I also think we need to think toward the future. We don't want to eliminate writers. We don't want to eliminate artists. We need to make sure that painters, illustrators, musicians, authors, creators can actually make a living doing what they do. Otherwise, the world is a worse place. We're a less democratic society. And hey, there's no training data for AI.
I mean, one thing we're dancing around here, though, is that there really is no sort of really formal AI policy. I mean, I know the Biden administration crafted one. The Trump administration ripped that up. I know they have their own version. But we're basically developing technology that we all have sort of decided is going to transform our lives and the lives of generations to come. Yet there really is no overarching policy on how this should be carried out, what those guardrails should be, what the ethics of it are. And I do wonder, A, if we'll get that, and if we do, will it be too late?
Well, I would urge people to kind of closely examine that belief that this technology is going to transform everything from now on. I think it is an interesting technology. It is a pretty immense mathematical achievement. But in the 3 years that we've had it, I fail to see any transformations on the scale of fire.
Wow. Yeah. Okay. Well, fire was a big one.
Fire was a really big one. The printing press, another one. But AI, it's incremental. Okay. So if we take down the tenor of the conversation, it becomes possible to make better decisions around it. And as far as AI policy, this is totally new. In the world, there has never been comprehensive AI policy before, so we're writing it right now. And I think one of the things we need to give ourselves grace around is the idea that we won't get it right the first time. Right? Silicon Valley has taught us the value of iteration, so we're going to have to iterate on policy, and we know how to do that. I mean, that's what the law does, right?
All right, Meredith Broussard, really appreciate your joining us today. Meredith Broussard is professor at NYU. She's also author of Artificial Unintelligence, How Computers Misunderstand the World. Of course, as we close out our program here, we're looking at Nvidia shares up about 4.5% in after-hours trading. We've got a key interview with the CEO, Jensen Huang, still ahead. It's a special edition of Bloomberg Technology at 6:30 p.m. Eastern Time, when we will hear from the man in charge of the company. Joining us now to discuss is Bloomberg Technology co-host Ed Ludlow. Ed, you will be speaking with Jensen Huang later on today. What is the number one question you have for him?
I think the only question is how they gave a guide for the fiscal second of $45 billion plus or minus 2%, and also disclosed $8 billion of lost sales because of H20 in China. So where did they make it up? It's really interesting, right? Jensen Huang was side by side with President Trump on the tour of the Gulf and the Middle East, and all of those deals that were announced where Nvidia is able to ship its latest generation GPUs to Saudi or the UAE, surely those aren't reflected in the 2Q outlook. So something interesting has happened here, but remain quite rightly noted in the 10Q. Long term, China's the big question.
Long term, China is the big question. I do wonder, Ed, if China is off the table. I mean, I was going through the language they use, and I understand just from a fiduciary standpoint, they have to sort of lay out the worst case scenarios. I get that. But this did not sound optimistic, particularly coming from a company led by a man who always seems to be optimistic.
Yeah, what happened when Nvidia took the write-down on the H20 inventory was not Nvidia saying that they had been banned from exporting it. They said that the United States required a license, and the inference that we took was that they weren't going to apply for that license. Then, more recently, during that trip to the Middle East, the Commerce Department rescinded the diffusion rule. So the next question, the big step, and we can ask Jensen, right? He's closely aligned with the administration, is will there be a new set of rules that you are waiting for before you engineer a product that is specific to China, or is that market closed to you? What Jensen Huang has said consistently is that 50% or more of the world's AI research is being done in China or by a Chinese citizen, a Chinese AI researcher. So clearly that's a kind of shot across the bow from Jensen, that he believes it's important to be active in that market. And we know that Tencent, Baidu, Alibaba, they were big buyers of H20. If they're not buying Nvidia, do they only have one choice? And that's Huawei, a domestic national champion of China. Does Nvidia have a view on that?
All right, Ed, we're going to let you go. I know you got a busy night ahead of you. Ed Ludlow, he has an interview coming up later here on Bloomberg Television with the CEO of Nvidia, Jensen Huang. That will begin airing at 6:30 p.m. Eastern time. Nvidia shares have been holding on to their gains in the after-hour trade, now up about 5% here. The rest of the Mag 7, not a whole lot of activity in the after-hours trade, though we should point out that there are a lot of big tech names moving. You have Agilent moving higher here on the day, CoreWeave up about 5% also in the after-hours trade. Cadence Design and some of those names that had plunged during their cash session, Scarlett, they are getting a modest bid here in the after-hours.
I'm going to be interested in seeing how the Asian chip makers trade, particularly names like TSMC, which works very closely with Nvidia, as well as SK Hynix of South Korea. They're going to have the immediate first reaction to whatever Jensen Huang tells Ed Ludlow, especially when it comes to prospects in China and how they're going to fill that gap.
And I just want to point out, too, earlier we were talking about this idea of how much Nvidia mattered to the broader market here. We should point out that there really is not much of a drag, at least in terms of futures right now, based on, or I should say a bump, I should say, based on the increase in Nvidia, which might be telling, and maybe you'll get a better sense of that when we get to the cash session tomorrow. You take a look at the board right now. Nvidia shares still up about 5%. The conference call with Jensen Huang starts at 5 p.m. At 6:30 p.m., Ed Ludlow will have that conversation with Jensen Huang. In between all of that, the team at Balance of Power will have all your political coverage